This video has been created by AXA Philippines to help its agents gain the necessary knowledge in life insurance selling. This is not intended to replace the regular classroom discussion required by the Insurance Commission. Your facilitator shall provide you with additional discussions and exercises to ensure understanding of topics. Foundations of life insurance.
How can life insurance help me?
Life insurance protects the family from loss of income brought about by life's risks. Death. Disability. Old age. Life insurance ensures that there will be shelter for the family, food on the table, education for the children. Life continues for those who are left behind. Life insurance replaces lost income of the breadwinner upon disability. There are two phases of old age: retiring from work and enjoying the fruits of years of hard work, and continuing work to afford basic needs such as food and medicines.
I realize now. I need to have an insurance plan so that my family will not suffer financial difficulty should any of the risks befall us.
history of all forms of life insurance originated with the risk-sharing arrangements of the most elementary form. The natural hazards of navigation on the Yangtze River in China were a constant problem to Chinese merchants who owned boats and shipped merchandise on them. The loss of valuable cargoes as a result of the sinking of vessels was always a possibility, and each such loss could result in financial ruin of the unfortunate merchant. So a few merchants got together and came up with an ingenious plan to solve the serious problem confronting them individually and collectively. A system was devised so that each merchant would divide the cargo among one another's boats, so that if 10 merchants shared the venture, each would have 1/10 of the merchandise on each of the 10 boats. By spreading the risk in this manner, the loss of any one ship would mean only 10% loss to each merchant, and no one need fear total financial ruin with the sinking of any one boat. This elementary risk-sharing principle has been passed down to us through the years and has been improved as well and extended beyond marine insurance use. People soon find it possible to share risks on life as well as on property. Death, disability, and old age are pure risks because they do not offer any gains for the family. Unlike speculative risks that may give a chance for gains. The life insurance business provides opportunity for people to help others in securing their future by preparing for their financial obligations and pay for unplanned expenses. Helps the family secure expenses for hospitalization, burial expenses, for the widow, education, retirement, estate planning, it also helps the economy through the investments it holds with other businesses. Insurance selling is a noble profession that also allows the agents to be gainfully rewarded. Knowledge on the tools in life insurance business helps agents sell insurance properly. It helps them select their prospects that may be accepted for insurance coverage. This, in turn, helps the life insurance company manage risks. The principle of large numbers is a theory of probability that states that the more times a particular event is observed, the more likely it is that the observed results will approximate the true probability that the event will occur. Babies and old people are prone to acquire illnesses, and the probability of death is high. It is because they have weak immune systems as compared to most people. Life insurance companies also use the mortality table in calculating premiums. The mortality table shows the incidence of death by age among a given group of people. Females generally have better mortality than males. This is due to the fact that most males are exposed to greater risks because of occupational and health factors. There are quite a number of males who hold labor-intensive jobs. It is also a common activity for males to smoke, drink alcohol, gamble, etc. When it comes to morbidity, the risk or incidence of sickness and disability, females have a higher rate. This is because they are exposed to risks of pregnancy and childbirth. Estimating the average lifespan of individuals also helps in managing claims in the future. Alongside life expectancy, the law of probability predicts the chance that a person will still be alive after a given number of years. What is the chance that I will get 7 spades at first draw? This is a simple application of the law of probability. To apply this principle in life insurance, we can say that there is greater probability that an insured will acquire a disease and die if he is living in a remote area where there is no access to medical facilities than in the city. Or there is a greater probability of accident if one is engaged in labor work than in a regular office job. AXA Philippines will secure your future by providing you with funds to replace lost income, for the education of your child, and to ensure a decent retirement.
How much premiums will I pay? Who shall I name as beneficiaries?
The person covered by life insurance is called the insured. AXA Philippines is the insurer. That provides the insurance policy which specifies provisions when benefits may be paid. The insured may designate his beneficiaries who shall receive the proceeds of the policy. He may choose to designate his wife, children, or anyone with insurable interest to receive the proceeds when he dies. For his policy to be effective, he must pay premiums.
Premiums?
Premiums in life insurance is determined by an actuary, who makes the necessary assumptions and calculations with respect to the principal elements in a life insurance premium. The actuary takes into account the tools in life insurance to make sure that the premium is fair for the client and the insurance company. To make an accurate calculation of premiums, the actuary would have to know of some details, such as the age of the insured, type of plan, riders, amount of coverage, sex of the insured, and the appropriate policy fee. Aside from considering mortality, premiums are also based on interest, safety margin, and operating expenses or loading. A number of premium options are available for clients to fit their individual needs. Clients may pay one time, pay premiums that increase with age, or level up to a specified year. He may also choose a graduated premium arrangement. Premiums increase every year up to the 5th year and remains level until the specified payment period. Or choose a modified premium payment. Premiums increase on the 5th year and remains level until the specified payment term. If a client prefers to pay in installments, he may choose to pay semi-annually, quarterly, or monthly. This is called fractional premium payment. A modal factor or conversion factor is used to compute for the premiums.
How can AXA guarantee payment of benefits?
A life insurance company pays for its claims and other future obligations pertaining to the insured individuals through its reserves. All life insurance companies are heavily regulated to ensure that there is a healthy level of reserves to be able to pay future claims. Insurance commission requires legal reserves, policy reserves, and contingency reserves that must be met by all life insurance companies. The premium receipt is given as soon as the initial payment is made. The client is covered with life insurance while his policy is being processed. This temporary coverage is subject to certain conditions. Binding premium receipt. Conditional premium receipt.